Hello, everybody. This video resource supports Chapter 2 in Fashion Merchandising Principles and Practice. And I'm delighted to welcome my colleague Liz Gee, who is the Interim Dean of the Fashion Business School at London College of Fashion. And we're going to have a conversation around the links between the finance specialism and fashion merchandising. So perhaps we could start off by you introducing yourself, Liz.
Certainly can. Thank you, James. Hi, I'm a chartered accountant by training, and I had a career within audit at Ernst & Young, which is now EY, and a career within Treasury at Debenhams. Then some time as a corporate banker with Barclays, and that led me to the London College of Fashion, where I've taught finance for a few years and strategy through designing courses and now leading the Fashion Business School as interim dean.
Thank you. So a very varied career. So I'm looking forward to a really good debate. I suppose the first burning question is why finance? What is the operational connection between product merchandising, which is product, its colours, its fashion abilities, its attributes, and profit and loss accounts, balance sheets, cash flow statements, etc.?
Well, profit. Do you think profit drives businesses, James?
No, I don't actually. You can be very unprofitable, but if you've got cash coming in, you can keep going. You can't keep going indefinitely, of course.
Absolutely. You're right. I
Profit.
mean, no business has ever failed through a lack of profit. I think that's often the misconception, that profit drives businesses, and it doesn't. Earnings drives listed businesses, but profit, whilst it's important, it's very much cash that is the lifeblood of any business. And profit, as reported profit, is often adjusted beyond recognition by accounting policies, by smoothing reported profits, by rainy day provisions, etc. And I think the constant growth for the search for profit and the constant search for earnings growth, I suppose, can make businesses very short-sighted and take very short-sighted decisions looking for fast return rather than longer term investment. And that's really important when you think about what fashion is, particularly what fashion business is. I think in terms of, so that's the profit and loss account, and inextricably linked to the balance sheet. If you think investments sit on a balance sheet, so form part of the net worth of a company. So net, if you're valuing a company on sort of net asset basis, and looking at a fashion retail balance sheet, you'll see a massive number on there, which is stock. And that's a huge investment of current assets, tying up cash until you can liquidate that asset by selling it. So there's a big link between the balance sheet and the P&L. And also, the key to any good fashion business is turning that investment into cash as quickly as possible, liquidating through that asset. So the concept of things like sell-through, the link between stock and sales. Clearly, you can't make any sales if you haven't got the stock. You've got to sell it, and you require cash to invest in it. So it's this constant cycle and this idea of turning, and cash has to be at the core of that, really.
Yeah, it's actually quite interesting that, because you have a bit of a dilemma there as a merchandiser. Too much stock means too much cash is tied up in stock, which within the fashion context may depreciate very fast, particularly if it's high fashion product. And at some point that stock may actually become a liability, I guess, if its value falls below the price that you paid to buy it. But alternatively, if you have too little stock, you can't generate cash to support the business, which is the lifeblood of keeping a business going. So I suppose cash is king. That's what, or queen in your case, which is what comes through loud and clear. So as treasurer within Debenhams, what do you think the best thing a merchandiser could do to ensure cash flows in, and what's the worst thing they could do?
Okay, so merchandisers, or good merchandisers, have to be very bold and have to be very brave really. They have to act decisively and quickly. They have to recognise the 80-20 rule, really. Perfection is not possible. And I always think that the best merchandisers are slightly maverick, sort of happy with a bit of a medium-term approach. And really, it's quite an exciting job, which gets a very bad press. I think they have to look to be fairly agile and cut their losses rather than pouring good money after bad, so from an investment point of view. So for me, it was always a clear as you go strategy. If you've got something that isn't working, you need to get rid of it. You need to liquidate that stock, free up that cash, invest it in the winning lines, things that are working. So it's an interesting tightrope, which makes the job quite an.
It is, and I always found that a calculated risk was worth taking as long as it was calculated. I can certainly remember, I mean, I've got two examples from when I was in industry. Firstly, a good example, when I was working within the lingerie industry and branded products started to really come into their own in the early 1990s. And myself and the buyer, we took a punt. We took a gamble on the Wonder Bra being a successful branded product, and we actually cleaned up the market, and we moved before anybody else had. Conversely, on the debit side, I started working with a brand based in the Netherlands to bring some more basic product into our fashion wear ranges, and I over-egged what I thought the opportunity was, and I think we still had the product swishing around about 10, 15 years later because I absolutely overbought. Both were calculated risks. One worked, one didn't, and I think your idea of looking at the medium term rather than the short term seasonal P&L or profit targets that you have is a point well made. Therefore, the role as fashion merchandiser is inherently risky. And the way that we have tried to limit that risk is to plan ranges around the idea of fashionabilities, and the core basic product will have a particular characteristic and a high fashion one will have a separate characteristic. And if you right size the way you approach them, you can get balance within the range. From a finance perspective, how can you risk manage this potential spending of huge sums of money with no clear visibility on return?
Mm-hmm. I think you've picked up quite interestingly about, finance people are often portrayed as very cautious, very risk averse, very dull. But good fashion finance people are a really rare blend. I think they understand that fashion retail model is a risky business. The company is basically betting, investing its cash in product that the buyers have selected, or the merchandisers working together. Albeit that research is based on research, it's based on experience, but it's still a bet, and that could be obsolete within days, let alone weeks. And will it be a trend long enough to sell through? So that's the core, and that's why stock markets don't particularly like fashion companies. That's why, in terms of valuations of fashion companies, they're often very undervalued because the market doesn't understand that market knowledge really. On the flip side, it's what trend have you missed? What opportunity cost could you have bought into? So yeah, I think that there is a danger of clash of culture. There is the product, the fashion versus finance, and that person, that merchandiser has to understand that creative brain really, and understand the customer. Absolutely. Which is interesting.
Absolutely. More so today with the ability through things like big data, artificial intelligence, where we can actually understand the customer in a way that we haven't been able to in the past. I'm very conscious you've picked up on the point of the uncertainties of the fashion industry, and I think we are talking together online today because we are in the midst of the COVID-19 pandemic. which was unforeseen, I guess. It was unforeseen as recently as March, judging by the slowness with which the various governments of the world reacted to what was going on. Does that sort of make this culture clash more accentuated, do you think? Because I could imagine you'll have a whole load of finance directors who are sitting behind their desk, gripping onto it, thinking, where's the cash coming from if cash is so important? And yet I've got this maverick merchandiser who wants to spend because they've seen an operation. Is the company mission and the strategy the thing that unifies them together to make those calculated decisions?
Yeah, I mean, it certainly should be, shouldn't it? I think you're right. The shared and well communicated vision should be what brings everybody together. But we're in very strange times now where everybody is focused on where's the cash coming from, because you can't fulfil that vision without cash. So there is not a finance director in the land who isn't looking at liquidating everything possible, every bit of stock possible has to be got rid of in some way, shape or form, or stockpiled if it's continuity stock. But it's a really tricky one. I would hate to be a finance director at the moment.
Absolutely. Any final comments? Any final thoughts?
I don't think. I think I was going to just talk about COVID really, because but you've already brought that up, so we don't need to talk about that again. But yeah, it's just very strange times, isn't it? Really. Let's just. I think we have to keep taking risks. We can't let COVID, make us even more short term. I think the businesses that will survive are the ones that are looking to the future post COVID. You can't just be blinkered by what's going on now. I think it will stop eventually.
It will do. It will do, and that is very good advice. The oil shocks, the two oil shocks of the 1970s ended eventually. The financial crash of 2008 ended eventually. We sort of haven't quite fully emerged from it when we've been plunged into another crisis. But you're quite right. If we preserve cash and look to cash management, that's one strand, but the second strand is to look to the future and continually change and update ranges and sort of have that sort of those twin hats of objective cash management with subjective art together, confused together. And I think that's where the opportunity and success lies.
It's building the brand, retaining contact with your customer and being empathetic with your customer. And it's those sort of directions that are going to keep the brands alive, I think.
Absolutely. Well, with that final key point, thank you very much, Liz. It's been great to see you again. I've no idea when we'll physically see each other again, but I will see you soon. And thank you again for your time.
Pleasure, James. Good to see you.